Alrighty, guys. Apologize if I confused you with a false prophet, a false After Schrock. I didn't change my microphone settings. The settings, everything's set up a little differently because of the new camera. I have a light over here. I have a light over here to light the background and to light me a little bit better, so that the green screen works a little. Last week, I think I showed you the background that we were thinking about using for the Schrock show that we're going to be doing on KFAB. And I'm still trying to get clearance. I mean, I want to do live video of that show, but I don't want to assume that KFAB wants long-form video posted to the KFAB Facebook page. The other thing is, technically on Facebook, you're not allowed to broadcast commercials in your live stream. So on the podcast, we get away with it during Compute This because they're commercials for Schrock. It's part of the show. It's not actually a commercial. Some stations actually inject their own commercials into our show, and so they clip out our spots and then replace them with their spots. That's why those are in there. That, and sometimes I forget to talk about our products and services, which is kind of the whole reason we're here. So the commercials kind of save my bacon there. But basically, what are we going to do during the commercial breaks on the KFAB show? Are we going to have a "We'll be right back" logo with a whoop, 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 to let people know that this is a live feed, you're watching live video, but there's just nothing to watch right now? Do we just leave the studio cam on and then mute the audio, which is going to be kind of weird? What do we do with that? Then what if I want to get up and go to the bathroom and you're just looking at an empty chair for a while? I mean, it's just weird, right? So, or do we maybe record it all and then clip it and post it after the fact? Maybe that's a way to do it. I don't know. So we'll figure it out, and I'll keep you posted on it. But the whole reason I messed with the camera and the lighting, I've noticed that on the Compute This shows, especially when I go back and forth in the view of the camera, the focus was constantly trying to adjust to keep me into perfect focus, which the software would blur and then come back and then blur and then come back. I just turned off the autofocus because I'm not really more than 3 feet from the camera at any point. There's not really any reason to have autofocus on because I'm right here. Number two, we added a couple Logitech Studio lights. They're about $60 lights. They're not expensive things, but it's basically like a puck about that big that shines light. So it's coming at me this way, hitting the background, hitting me, lighting me up. And the objective was to we're going to get this going here, to get that to look better. So you remember last week when I showed it to you, it was a lot. It's still kind of fuzzy. It's not sharp. And if I make it super duper sharp, then I become translucent. Now that's how bad the lighting is in the studio. At home, when I did this at home with just basement lighting, like LEDs in the ceiling, it was great. But in here, even with the supplemental lighting, I'm still a little fuzzy. So it's good enough though for it's good enough for a 2-week show, right? Good enough? All right. So anyway, there we go. Compute This is back. So let's get 80 already. Oh my gosh, I'm sorry. No audio? There is audio. Oh God, you scared the hell out of me. Mark, what's up with that? I've been talking for minutes and there's no audio. Karen and I are back. Randy's here. Mary's here. Mark is here. Winston's back. And Winston says the audio is good. And he is the unofficial audio technician of the Compute This radio program. He's Schrockville's audio guy. So anyway, thank you, Winston. I appreciate it. Cheryl and Rich are back. Steve's good. Ready to discuss SVB. Yeah, we're gonna spend the whole After Schrock on it because there's a lot to unpack. Janet, and there's a lot of people who think it's not a big deal. They don't care. They're like, so what if a bank in California fails? Banks fail all the time. What's this? Why is this one special? Waiting for knowledge. Learn more from the local news crap. Well, we're going to try to fix that on that KFAB show during the afternoons. It's been a challenge to try to put together a video is lacking. Oh, that's not good. Roger, what can I do to make it better? All right. So it's been kind of a challenge trying to plan out what to do during that program. I won't spend a ton of time chatting with you about this, but if I got on there and I opened up the World Herald and read the news of the day and just said, let's talk about it, they'd be totally fine with that. I'm a fill-in guest, right? I'm a fill-in guest host. trying to get them through a 2-week period. As long as there's something on the air, it's good. That's not me. I want to help you connect dots that you're not going to connect otherwise. I want to tell you news stories that you're not hearing anywhere else because they're just not being reported. And there's tons of it. It's not like I have to search. So anyway, it's going to be fun. We're going to have a lot of fun. That's going to be the 20th through the 31st on 1110 KFAB from 2 until 6. So just a 2-week run, but it'll be fun. All right, so SVB Bank. Silicon Valley Bank is a bank in California. It is, numbers bounce around. It's easily in the top 20 banks in the United States. I would peg it around number 16 as far as assets and size. So the bank suffered a classic bank run. It's the It's a Wonderful Life movie. Exactly what happened in that movie just happened at the bank. Bank president came out. Everything at the bank is fine. Everything is fine. As long as you all don't want all of your money at one time, we're good. Because, we have a fractional reserve banking system. It's not like anybody thinks that, when you go deposit money in the bank, that there's a giant vault that has a stack of cash in it that is your cash and that you can take out anytime you want. That's not how fractional reserve banking works. They keep a fraction of your cash on hand to satisfy probable demands for cash. Okay? So what happened? SVB Bank suffered a classic bank run. People started taking their money out. Why were people taking their money out? Okay, so let's roll back to the pandemic. During the pandemic, tech companies were flying, right? And that's what SVB Bank does. They have a disproportionate exposure to the tech industry. Let's put it that way. But during the pandemic, that was great. Their assets jumped by like $62 billion. Their deposits went way up during the pandemic because all these tech companies had this huge influx of capital from everybody using their services as they worked from home. New startups were born. New startups were financed through this bank. As a condition of your financing, if you're a startup company, let's say you want to make the next Uber, right? You're going to burn cash. You're a cash incinerator for 5 years, just as you try to gain market share. And then after that, you're going to kind of convert and flip and try to make money, try to be positive, and then ramp up basically so that you're cash flow positive and you're a successful business. You pay back all your loans and everything is great. So let's just say, for the sake of discussion, that you borrowed $100 million to start your startup from Silicon Valley Bank. A covenant of that loan required you to keep that money in that bank. Please keep in mind that the FDIC insures business deposits and individual deposits up to $250,000 per entity, not per account, per entity. So if you have $100 million in the bank, which I don't have to worry about this, but if you have $100 million in the bank and you have it all in one bank account or all in one bank, the FDIC will insure up to $250,000. Everything after that is not their concern. So what ends up happening is, now that the pandemic has worn down, we've kind of seen the tech bubble start to crumble, right? IT companies, tech companies have been withdrawing money to make payroll, not like withdrawing it like bank run withdrawal, but just normal course of business. They've seen that $62 billion of assets start to go down. But you see, they're a fractional reserve banking system. So when they got that $62 billion of new deposits, they don't just sit on them, because you don't get any return just sitting on money, and the bank is there to make a profit as well. So the bank says, you know what, we're going to be super conservative with this, because we recognize, this is the thing, SVB didn't do anything wrong. They didn't do anything illegal. They didn't do anything immoral. They were just a fractional reserve bank that got hit with a run. They said, we're going to take this $62 billion and we're going to put it someplace super safe so there's no risk. We're going to buy United States treasuries, okay? We're going to buy long-term treasuries at 1.5% interest. Yeah, the interest rate's not great, but it beats getting nothing for letting it sit around. And inflation's only at like 2%, right? So it's not a big deal. We're losing a little bit, but, we'll be fine. Okay, so right now, because inflation went off the hook, nobody predicted that the Fed would raise rates by 1,600% in the course of a single year, which has pushed the 6-month Treasury to 5% interest. That's why you can go and get 3, 4, 5%, or 3 or 4% anyway, in a money market account right now at your bank, because the short-term Treasury is at 5%. So now, let me ask you this question. If you have money, excess money, what are you going to do with it? Are you going to buy somebody's 30-year Treasury that's paying 1.5% interest, or are you going to go out and buy a brand new 6-month Treasury? Your money's only locked up for half a year. Get 5% interest on it, and then reevaluate and see what you're going to do next. Maybe interest rates go up more. Maybe you get more money. Maybe they come down. Well, then you can go back and buy that 1.5% Treasury bill, because you see, even if interest rates drop to 2%, when you buy a Treasury bill at 1.5% interest and then new Treasury bills are being sold at a higher interest rate, why on earth would you buy the low one? You're going to go buy a new one, a high one, to get more money. So they have to sell the lower ones at a discount. They have to make up that extra money that you would have been getting, and that's what SVB did. So they saw a drawdown on deposits. They hit a point where they were concerned about their liquidity. So they were going to liquidate a bunch of treasuries to raise capital to capitalize the bank. Except their treasuries aren't worth what they're booked at. We're going to get back to that. That's important to remember. Their treasuries have a book value, but the book value is not marked to market right now. So as a result, when they tried to sell those treasuries, they raised billions of dollars, but they lost $1.8 billion in the process. So here you have depositors looking at this bank, and they're like, this bank was willing to lose $1.8 billion on treasuries that they didn't have to move. They didn't have to do anything. They could have just left it alone. And it wouldn't have had a loss. They wouldn't have had a $1.8 billion loss. They wouldn't have marked it to market. So it would have just been the value that it was. But they had to raise the capital, so they sold it. It was an easy way to raise capital, but expensive. And it spooked people. People were like, if the bank is willing to lose, how bad is it that they're willing to lose $1.8 billion just to raise like $50 billion or $50 million or whatever it was? It's like, how are they willing to lose that much money? So some people started pulling their money out of the bank. Word started getting around. Then Peter Thiel of PayPal fame, one of the biggest venture capitalist guy in all of America, came out publicly on Twitter and said, get your money out of that bank. If you are a startup, if you lose your capital, your business is dead. Get your money out. Break the covenant. You can always put the money back. You can always make things right with SVB later. But in the meantime, make sure you are protected. Get your money out. Now, before he tweeted that, he got his money out. All of it. So he's good. Peter Thiel, if you were worried, Peter Thiel's good to go. But everybody else that couldn't get out is screwed. So, what happens next? The FDIC has closed the bank. They created a new legal entity to assume the assets of the bank and the operations of the bank. So, like I said, Schrock's payroll that was supposed to go through on Friday never hit our employees' accounts. Why? Because that money was taken from our account on Wednesday, and it was deposited apparently into an SVB account. We don't know where the money goes. It goes to Patriot Software. Patriot is our payroll company. They handle our direct deposit. So then it goes to SVB. On Friday morning, it's supposed to be transferred to all of our employee accounts. That transfer never happened because the FDIC shut down the bank before 3 o'clock that day local time. So the wire transfers never went through. And when the FDIC closes your bank down, you can't send any money out. You can't, no withdrawals, no deposits, everything. They literally locked the doors. There was a line outside the bank trying to get their money, just like in It's Wonderful Life. They had to call the police because people were getting rowdy because they couldn't get their money. They locked the doors. They shut the bank down. They shuttered it. Now, there are two paths forward for SVB Bank, or SVB, because bank, the B is bank. Silicon Valley Bank will either, one, get acquired by another bank. Like Jamie Dimon might come in and say, this was a classic bank run. The bank wasn't doing anything wrong. They had a good book of business. Everything seems good with the bank. Yeah, it's in the tech industry, and they're a little heavily exposed to that, and it's going through a tough time right now. But this would seem to be the time when you would acquire something like that, so that you can acquire it at a value, right? Especially when the government's desperate and they're trying to offload it. And the seller doesn't have a choice if they want to sell or not. They're being forced to sell by the government. So Jamie Dimon or somebody like him, or Elon has even floated the idea. Somebody floated it on Twitter, and Elon said he wasn't opposed to the idea, which I don't know where he would get the money to do it, but somebody could buy SVB, okay? If that happens, SVB, on paper, has enough assets to cover liabilities. Now, the problem is those assets, when they're sold in a fire sale, will not get the full book value of what they're supposedly worth, and in that environment, they're not going to raise enough money to cover everybody's losses or everybody's deposits. So people are going to lose money. Option one is somebody buys the bank and everything is good to go. They just assume everything, they make the deposits good, everything is great, continue on. My paycheck arrives on Monday like nothing ever happened, and everything goes back to normal. That would be the Fed's desired outcome for a lot of reasons. Because option 2 is pretty schnasty. Option 2 is nobody acquires the bank. And the FDIC's special company that they set up to manage the bank ends up being the company they set up to liquidate the bank. So FDIC doles out the $250,000 to every depositor. It's not clear if Schrock Innovations is considered a depositor at SVB because our payroll went through Patriot. So is Patriot the company that deposited the money, or was it deposited on behalf of Schrock at SVB? Then we would be. Patriot says that we're insured up to $250,000, so we don't need to worry about the $20,000 payroll being lost. We were capitalized well enough that we were able to make good on the payroll. We wrote paper checks and said, here you go. When your paycheck gets direct deposited, just pay us back. Sorry for the trouble. This is really shitty. Here's it in the news. It's not that we didn't have the money to pay you. It's that the bank failed. Who'd have thought? So the FDIC in option 2 comes in. They give everyone their $250,000, and then they say, we're going to sell all the assets, all the treasuries. We're going to sell everything, and then we're going to take all that money and we're going to divide it up amongst the depositors based on how much you had in the bank. So you're not going to be made whole, and it's not going to be a fast process. Okay. Why is option 2 so nasty? I'm going to read comments, and then I'm going to get back to that here in just a second. All right, let's go scroll. A lot of comments here. Okay, waiting for knowledge. We did that one. Here we go. Roger's back. Ronald says it's very acceptable. Thank you, Ronald. Northwest Missouri is here. Oh, wow. Tom is back. The audio is great on my iPad. My Surface seems to hate me now. Aaron, I'm just imagining you you're in a small room, just surrounded by devices, and you're just like, nope, this one's not going to do it today. Nope. And there's just this blue glow coming out of the room, the door to your room. All right. Let's discuss the banking stuff. Yep, okay. The reason I asked you about the printer was because your service center says most of the problems I see are with HP printers. This is true because most people buy HP printers. We sell Canon printers. Here's the dirty little secret. Canon makes all the technology that goes into every inkjet printer, no matter who you buy it from. If you're buying an HP, you're buying a Canon. If you buy an Epson, you're buying a Canon. All the technology is licensed from Canon. They all have their different idiosyncrasies, but the reason I recommended HP printers was because of the software. The Epson EcoTank software is absolute garbage. It is awful. We were never able to get that printer to network right in the house. The HP printer, for whatever reason, it gave my wife a hell of a time setting it up. I was able to get it set up after it took about a half an hour. So it would have been a solid on-site if I was charging her. Of course, she gets her tech for free. But now it's on the network and we can share it and everything, and it works great. It's the same concept. You fill up the tank full of ink, you can print thousands of pages before you have to refill it. So no problem at all, Kyle. Richard's here. Sorry, I'm just going through these comments real quick, guys, just to make sure that there's nothing that anybody has asked that I don't want to ignore it for an hour and go on some rant, right? From Forbes, SVB financial CEO sold 3.6 million. Yes, he did. Now the question is, did he know something? But this was a bank run. If the bank knew that there was going to be a bank run, would they have not raised capital before? Now, usually when a CEO sells this much stock, it's an orchestrated event. Like, they have to fill out paperwork in advance. They have to get it approved by the SEC. Like, there's a lot that goes into it, right? So I'm not sure. It sure looks shady, but I'm not sure that it was actually like a nefarious thing. Like, the bank's in trouble, I'm going to get out now. It's great for him that he did, obviously, unless, of course, if he sold $3.6 million in SVB stock and then deposited that into his SVB bank account, that would be a problem because that's over $250,000, you see. I'm not sure if you're aware, there's a background talking noise. Yeah, let me see if I can, is there any other headphones in here? Yeah, there we go. So hopefully that takes care of it a little bit. Headphones are plugged in and it grabs the KFAB sound as if someone in the studio was sitting here. So you were actually hearing headphones on the table around me. I'm sure the guys love it when they come in on Monday morning and Gary and Rosie sit down and they're like, why is everything unplugged? I should be a courteous guy and plug it all back in before I leave. I'll try to remember to do that. All right. Okay, party time. 100 viewers, 111 viewers, 117 viewers. So did Schrock change payroll? Gosh darn it. Payroll management. Well, this happened on Friday, so no, we haven't made any changes yet. We couldn't. We still don't know what's going to happen with it. And see, this is the thing. I want to be mad at my payroll company, but it's not their fault. The bank failed. They don't have our money. They did exactly what they were supposed to do. We did what we were supposed to do. They did what they were supposed to do. The bank did what they were supposed to do, but the bank run caused the bank to fail, which caused the payrolls not to go out. And we are not unique. If it's happening to Schrock, guys, I mean, there's tons of payroll services that are online based now. Paychecks, Patriot. I keep wanting to call it Ripple, but it's not Ripple. I can't think of the name of it. But basically, there's lots of, and some of them are startups and some of them aren't. Some of them were financed through SVB. Some of them were just keeping their money there. You got to remember, this was the 16th largest bank in the country. If you're going to bank somewhere, you have a bank that specializes in tech startups, and they're the 16th largest bank in the country. It seems pretty safe, right? If you're a tech startup, that's where you want to be. That's where I would want to be. So no, we haven't made any changes yet, KJ, but we might. We'll have to see what happens here. All right. Maybe he had Nancy Pelosi broker the transaction. Maybe. So is this the start of a great reset? This is part of the start of the great reset to test it. That's a sentence right there. I had to read that one twice, Kyle. In 2008, there was a bailout when taxpayers' money, and now maybe a bail-in and take consumers' money to save them. Even if it cost me $20,000, guys, I do not want to see a bailout here. There are going to be incredibly painful consequences if this bank does not get acquired. The consequences will be so painful that the temptation of a government that thinks they can print their way out of anything is going to be to bail out this bank. Because one of the things what we're going to get to now is what's going to happen next. So why are we going to know what's going to happen next by today? Asia markets open tonight. So our time tonight. Bank stocks got absolutely hammered last week. If there is the belief that there is a systemic contagion, which is what we're going to see here, in all of the banks around the world, bank stocks are going to get hit. We're talking a worldwide dump in financial services stocks. The Fed can prevent that by announcing what they're going to do today, before the Asia market opens. If they don't, it's going to be a bloodbath on Monday morning. Bloodbath. If they do, there's two options. We've covered those two options. Maybe somebody buys it. Yay, everything's better. Nothing to see here. Maybe somebody doesn't buy it. Now, here's the thing. Number one thing we can expect. The problem of interest rates going up. We saw the strong jobs report this week. There's another report coming out next week. I forget what it is. It might be inflation. I can't remember. But basically, the Fed's going to have to keep raising rates. They're going to have to raise it higher than their terminal rate, than what they previously said was where they wanted to raise it to. We're going to probably see 6% interest rates from the Fed at some point. Does he raise a half point or a quarter point? It doesn't really matter because he's just going to keep raising until he gets the result he wants. So whether he does a half point today or a quarter point today or a quarter point tomorrow, doesn't matter. If he does a quarter point every time until he gets to where he wants to go, he'll get where he wants to go. Okay? So rather than focusing on the day-to-day day trader events, focus on the fact that we believe in mass that interest rates are going to go up in the short term. Short-term treasury bills. The whole reason this happened was they couldn't sell their portfolio of super duper safe treasuries because they're not worth what they paid to get them because new treasuries pay a higher interest rate. Now the interest rate on new treasuries is going to get even higher because the Fed's raising rates. So maybe not 6%, but you can see 5.5%. It's going to keep ticking up on short-term treasuries especially because the curve is inverted right now. That's basically that's language for short-term debt. You think you should get more money for locking up your money for 30 years. If you buy a 30-year bond, you should get a higher return than if you bought a 6-month bond. But right now it's inverted. The world is upside down. You're getting paid way more money to get a short-term bond than if you bought a long-term bond. And the reason is because people believe that the interest rates are eventually going to come back down again. So why the long-term bond is taking that into effect. So the long-term bond is higher than it used to be, but it's not 5%. The short-term bond, everyone knows in the short-term interest rates are going to go up more. So you get a better return on the short-term money than you would on the long-term money. It's inverted. It's upside down. So that's going to continue. What is going to happen as bubbles start popping as a result? Now, the next one that's going to go, guys, the tech bubble is already kind of, it's deflating faster than a Chinese spy balloon. Let's put it that way. The next one that's going to go is going to be commercial real estate. Commercial real estate is in absolute terrible shape. Why? A lot of people think that commercial real estate loans work the same way a mortgage does. So you go get a mortgage for your house. You get a 30-year mortgage. You pay X% interest, and the payment only changes when your taxes go up because they always go up. So that's great for residential users, but that's not how commercial real estate works. Now, commercial real estate, especially large portfolios of it, have to be refinanced periodically. So we've had a long time, 20-something years of pretty much 0% interest, right? Or negative interest rates even. Now we're at a point where the interest rates, they're still, considering inflation, they're still negative, but they're way more expensive than they were before. What that's going to do is it's going to cause people who own real estate, that's going to cause their payments to go up. So right now what landlords are doing, what rich landlords are doing, they're just not paying the bills right now. They're just like, yeah, I don't think we're going to pay that. You can sue me. And nobody wants to sue them because it's going to take a decade to get your money back. So can't we work something out? Sure, we can work something out. You're going to give me a better term. You're going to give me a lower price. You're going to reduce my principal balance. You're going to do what has to be done so that when I refinance this, my payment doesn't go up. You're going to eat it, not me. And if you don't like it, I just won't pay you, and then you'll go bankrupt. And yeah, you can sue me, but you'll be a bankrupt guy suing me. Go fish. So that's what's happening in big real estate right now. But there's not everybody can afford to do that. So what's going to happen is the cost of these of office buildings basically is going to go way up. Guess what's not getting used right now? Office buildings are the new shopping malls. Like, there's so much vacant office space, and all you're hearing about locally, nationally, new buildings going up. We're going to build a skyscraper downtown 72nd and Dodge. And you're like, who's going to work in it? There's so much office space around town right now. Go on LoopNet. You can find office space everywhere. And the prices haven't come down yet. But they're going to come down because they're going to have to come down because the amount of inventory is going to, I mean, the whole market is just, it's zombie right now. So when these landlords have to roll their debt and they're faced with the same problem, that they're going to have a higher interest rate when they refinance their debt than they had before, it's going to cause failures. It's going to cause loss of valuations and funds that invest in commercial real estate. That is going to reduce the amount of money in bank accounts at banks across the board. Big banks are going to be just fine. The JP Morgans of the world, they're going to be fine. US Bank, going to be fine. Community banks, smaller banks, regional banks, like SVB, not so much. They're going to have the same problem. And as soon as there is a hint of a liquidity problem, somebody's going to say something, which, I mean, shouldn't you? Like, if I found out my bank had a liquidity problem, I would pull a Peter Thiel. I'd take all my money out, and then I'd get on the radio and I'd be like, if I was with, Billy Bob Bank, I would probably pull all my money out because, I did. You should too. And you might go pull your money out of Billy Bob Bank. And then Billy Bob Bank has a bank run, and Bob's your uncle. Here we go again. So we're going to see more bank failures in 2023. It is really important. If you are, unlike me, if you're lucky enough to have more than $250,000 in a bank account, do not keep that in one bank. If you have more than 250, keep everything below the FDIC insurance limits. I understand, maybe one bank's offering you a slightly better interest rate or something, but look at these businesses and what's going to happen. And that's the second part of this fallout. This is the contagion part. This is what's going to happen next. As I mentioned, the Fed has two options. Somebody either buys the bank or they liquidate the bank. If they liquidate the bank, all of these startup companies, I mentioned, let's take the example again of the I'm going to be the next Uber startup company. And I have $100 million of venture capital. I've deposited at SVB, and now SVB is done. My $100 million has now become $250,000. Okay. Another thing that many people don't realize is that when you own a company, or you have a board of directors in a traded company, the board of directors and the owner are personally responsible for unpaid employee wages. Personally. So, if you are on the board of directors or the owner of a startup, and suddenly your bank account goes from $100 million to $250,000, you're not going to be able to pay your people. So what do you do? Not Monday, not Tuesday. What do you do today after it's announced that they're going to liquidate the bank? Today you fire everybody. Sunday, today, you fire everybody. Because you don't want to be personally responsible for their unpaid wages. Guess that next unemployment report ain't going to look so good. Again, the Fed, best scenario for everybody here is that somebody acquires this bank. So the Fed is probably leaning on tons of people right now. That's why people are talking about a bailout here. These are some very politically connected people in the venture capital world that are going to lose an unimaginable amount of money. Just like that. If there's no bailout here. Which is why we can't bail it out. It is time to take the medicine. It is time. We can't. Risk is real. Risk was not mitigated at this bank. Lessons need to be learned from this. The best lesson is for people to get absolutely frickin' torched. And then they don't do it again. Or at least they don't do it again for a long time. Now, small businesses like me, if I lost 20 grand because of it, that sucks. That sucks a lot. And other businesses, maybe we lose some startup companies and people lose their jobs, and that sucks for them a lot. It does. But sometimes when people make bad decisions, there are consequences. never occurred to me what bank my payroll company might be using to process direct deposit. It never occurred to maybe we should be doing direct ACH ourselves with Cornhusker Bank here in town, rather than relying on a third party to handle it for us. Sure is convenient, but look at this. We don't control it. Lessons learned here. What can you control in your business? What should you control? What should you outsource? There's so many lessons that can be learned from this. I'm going to jump back into the comments here real quick, and then we'll come back to discussion, because there are so many comments. Okay, so we got that one, got that one. All right, the Great Reset. Okay, there we go. Ronnie thought something I said was funny, but I don't know what it was now. Amazon's currently offering seasonal full-time technical support associate positions for residents of 32 states. Well, that's cool. Thank you for your analysis. No problem, Larry. Net interest payments on debt are estimated to be $395.5 billion this year, or 6.8% of all federal outlays. Oh, yeah. Yeah. We're going to talk a lot about this kind of stuff on the Schrock Show, is what we're calling it, that we're going to do for 2 weeks on KFAB. There's going to be a lot of all the stuff that you've heard today in the news, guys, that I've told you about SVB, how it started, why it happened, what's going to happen next, what the systemic risks are. You're not getting that anywhere. I have to read Zero Hedge to read this, and I have to read an article about stock valuations and then try to figure out what in the hell it means. I'm not a stockbroker. I'm not an economist. Don't take your financial advice from me. Don't move your investments because I say something, because you're an idiot if you do that. Because I'm an idiot, okay? I don't know anything about this stuff. I'm a computer guy. But I can read, and I've got some gray matter. I can think, and there's lots of dots all around us every day. But no one is taking the time to connect the dots. Look at what happened with Tucker this week. He airs the tapes from January 6th, and suddenly, it's like he was there. Let's just put him in prison too. I mean, the reaction to this from both Republicans and Democrats on both sides has just been awful. It makes me believe the people who are like, oh, they're all the same, uniparty. Doesn't matter who you vote for, they do the same thing. I used to think that was just hyperbole, that sometimes human nature is human nature. We're going to do the same thing sometimes, but wow, it sure made you think. It sure made me think, right? So that's what I want to do during the show that we do during the week, and we got to have fun when we do it too. We can't just do doom porn the whole show, right? Because then no one will want to listen. People will listen intently for a while, and then eventually they'll just start weeping, and they'll just turn it off. I can't have it. So we got to have some fun too. So we got some cool stuff planned there as well, and what we can do about it. What can we do about any of this? It's great to know that all this is happening in the world around you, but what in the heck can you do about it? Well, we'll cover that too. All right, Fed chairman just announced no bailout. Oh, wow, just now. Okay, so obviously I'm not taking in breaking news because I'm breaking news to you. So the Fed chairman announced no bailout. So that was Yellen. Janet Yellen said no bailout. All right. Fox News is predicting a run on bank stocks tomorrow. Oh boy. 11 o'clock p.m. there will be an announcement about the potential buyer for SVB. 11 p.m.? I wonder what time well, it's 11 p.m. Eastern. So I wonder what time I think the Asian markets open at 9 o'clock Central. So that's an hour after they open. So at least it'll be still within the time to recoup some losses. Larry says, agreed, the chickens are coming home to roost. Every time somebody says that now, there's I don't even know who said it, but it was during Obama's campaign, there was some preacher guy, and he's like, the chickens will come home to roost. And whenever somebody says that now, this big black preacher guy, the chickens are coming home. And it just makes me visualize that in my brain every time. Your statement about third parties being involved is a lot of the problem. Their background always seems to have holes. Well, and James, this comes down to, we went from being a very simple economy. Think of in the 1950s. If you went to a gas station to buy something, the gas station had suppliers, and those suppliers got their stuff from domestic suppliers. The supply chain was relatively simple. And there was a lot of backstock on because you just never knew how much was going to sell. They didn't have computers and financial modeling and all this stuff. They just had they had Bob, and Bob was like, I thought we're going to sell this many Snickers bars this week. And he would just put that many Snickers bars in the order, and he would keep them in the pipeline, right? Don't want them to go bad, but we got to make sure we have them. Well, now with just-in-time inventory, oh my gosh, guys, I'm going to tell you what. Don't ever, if you enjoy peanut butter cups, Reese's peanut butter cups, do not, under any circumstances, ever Google what's in them. They announced they're coming out with a plant-based peanut butter cup, and I'm thinking, hey, this is great, right? Plant-based peanut butter cup? Wait a minute, hold on a second. Peanuts, cocoa, vegetable oils. What's not plant-based in a peanut butter cup? Sugar? Sugar's a plant. What is not plant-based, right? So I looked it up. If you like them, don't do it. I haven't been able to eat one since. Like literally, my son, there's a bag of them in the pantry. My 4-year-old's like, Daddy, let's eat peanut butter cups. And I'm like, no, I don't want you to die, my lovely son, All right. Well, thank you, Melissa. I appreciate it. The show on KFAB, guys, I need you all there, okay? I've been listening to the fill-in hosts on KFAB, and, I listened to Chip and Nabs, and then, I listened to the host they have this week, and I keep forgetting his name. And I hold on, I've got it right here, because I had to text Scott. I'm like, what is his name? Because I hear it, and I keep forgetting. Someone's going to say it on there before I find it here. Joe Herring. And literally, I think my grandma actually called him. My deceased grandma, God rest her soul, called Joe Herring to tell him he was a waste of oxygen. She said, fiddlesticks, you're a waste of oxygen, get off the air. And I thought, oh my gosh, is that Mark Levin's mom? Like, what is this? Like, I've never heard that many people call a guy in that short of a period of time and tell him he was a piece of garbage. And I'm like, maybe the lovely Kimberly's right. Maybe you can't read the time and temperature on KFAB without being called a piece of garbage. Maybe I shouldn't be doing this. I don't feel so safe. So I need you guys. I need you guys for that when that happens. All right. Jeremiah Wright was the preacher. That's right. Yellen said no bailout. So we have double confirmation now. How will credit unions fare on this? Credit unions have a very similar deposit insurance. It's basically FDIC for credit unions. They're protected up to $250,000 as well. Credit unions will have the same liquidity problems that banks will have. The problem is everybody in the financial world owns treasuries. Everybody does. Now that the new treasuries are worth so much money, well, as long as that yield curve stays inverted, people are not going to put their money into banks. So you don't see money going into bank accounts right now. So, okay, let me give you a great example. Schrock Innovations qualified for an employee retention tax credit for employing people through the pandemic. We qualified for enough that we don't want to put it in one bank, if you know what I mean. What are we going to do with that money? Am I going to deposit it into a checking account and let it sit? Or am I going to put it in a money market account where it can earn 4% interest? You better believe it's only 4%, but it's not going to keep up with inflation, but it's better than nothing. And I'm not going to turn around and blow this money because the qualifications for the money, like the rules, the IRS was really wishy-washy with the rules, right? So if they would ever come back and say, oh, yeah, you shouldn't have done that. So we're going to hang on to this money for like 5 years just to make sure everything's kosher pickles in case we have to pay it back. But in the meantime, we're going to earn some interest on it, right? I suppose I could pay down my SBA loans, but holy biscuits, I got those at 1.3% interest. Why would I pay those off when I can earn 4% interest with the money in a money market? But I sure as schrock. That was a close one. That was almost a class 2 filter failure right there. I sure as schrock am not going to put it in a bank account, in a checking account, or even a savings account that earns me 0.3% interest. I'm going to put it in a money market, which means it doesn't go as an asset on the bank's balance sheet. Deposits are coming down because people are pulling money out of the banks and putting it into higher interest-bearing, safe investments, money markets. Why would you buy a treasury when you can get a money market for 4%, have access to your money anytime you want? Why would you do it? So that's what we're going to do. And we're not going to touch it. So it's going to earn, $10,000, $11,000, $12,000 a year, sitting there doing nothing. We'll capitalize the interest, call it good, whatever, roll it over. But the problem that you're going to come up against is everybody's making that same decision right now. Anybody who's got money in the bank is going to make that same decision because that's the decision that makes sense fiscally. Why buy somebody else's crap when you can have something that's nice, that's more valuable? So what happens to all the junk? As interest rates go up, the older bonds go down in value. And as they go down lower, when banks have to sell those to capitalize themselves, they're going to get even less. Do you see why this is a problem? Oh, let's see. Crickets and Insects Ground Zero with Clyde Lewis did a recent show on how a lot of our foods have insects in the processing. Oh, yeah. I'm not even talking about insects. I'm talking about the chemicals, guys. The stuff that they put into peanut butter cups to make them taste that delicious. Does this mean my 401k is in trouble come Monday? Probably too late to move it into a stable fund. Well, here's the deal. There was an explanation of how money works. There was an article, and again, I don't want to use up all the material I've been researching for the Schrock show, but there was an article that ran that said basically Gen Z kids have an unrealistic expectation of being rich. 78% of Gen Z kids believe they're going to be rich within their lifetime. Like go play the yacht rock rich, and it's just not going to happen. And so, why do they believe that? Because they believe that they're going to take their money and they're going to put it in the stock market or they're going to put it into crypto, and it's going to go. It's going to do a moonshot, and they're going to walk away with a ton of money. And so this article said, "Let me explain to you how money works." And I thought, okay, this will be good. Explain to me in 30 words or less how money works. Number one, wealth is built through your career. Your job, your income is what is generating wealth for you. So rule number one, the amount of your wealth increase, it can never be larger than your income. Makes sense? Okay, I'm with you, I'm tracking. Number two, if you consume all of your income, you will have no wealth. In other words, you have to save some. Yeah, I get it. That's why I have a 401k, everything else, that's great. Number three, the purpose of the market is not to generate wealth. Now that one threw me for a second. What do you mean it doesn't generate wealth? Every stock, commodity trader, day trader, that's the whole point, generate wealth, right? No market generates wealth. Every market preserves wealth over time. And then the light bulb went off in my head because I was like, hold on a second. If every market preserves wealth, what that means is to keep up with inflation, it's taking my savings and it's preserving my purchasing power. So yes, on paper, if you look at a chart of the stock market, look, it goes up. Match that up with a chart for inflation. And they track pretty much the same. So in other words, the numbers got bigger, but your purchasing power stayed about the same. Okay, over time. Now, granted, if you're trying to retire tomorrow and the market takes a dump and you try to cash out, well, yeah, that's bad for you, right? And if you cashed out during the dot-com boom or whatever, cashed out at the top of the pandemic last year, good for you. You did great, or 2 years ago. So anyway, but over time, it trends out. So the market is intended to preserve the purchasing power of your wealth, not build new wealth. So to put this into simple layman's terms, if I was able to save enough money today to buy 100 Reese's peanut butter cups, okay, and all the chemicals that go in them, delicious. And then I turn around and 20 years from now I go to retire. In theory, the money that if I put that amount of money to buy 100 peanut butter cups into my 401k, when I cash it out of my 401k later, I should still be able to buy 100 peanut butter cups, even though the price of peanut butter cups has increased 150% over 20 years. The purchasing power is preserved. That hit me. So in other words, whatever you save today, if you just assume take the amount you spend every month on everything that you do, and if you save that amount, that will buy you 1 month of living later. Now, of course, it's more complex. Of course, I'm not a financial advisor. I'm sure I'm dramatically oversimplifying it, but 30 words or less, right? So there you go. And when you look at it that way, should I do something with my 401k? Well, it depends, So here's the thing. Some people will tell you the thing you should do tomorrow with your 401k is make a deposit. Because when the prices go down, you get more shares for your deposit, dollar cost averaging. So there's an argument to be made, a legitimate argument, that you shouldn't do anything different, that you should just keep marching, soldier. However, I will admit that I, in the past, have played with my account. The problem is, if you tried to move all of your account to something safer, it takes time to do that, and it's done in the market. So if the market tanks tomorrow and you process a move today, it'll execute tomorrow in the middle of all that chaos. If you leave the money alone, you're going to lose a lot of money if you move. This is one of the things. I sold Bitcoin at $16,900 a coin, and it went up to $24,000, $25,000. My wife's like, "Are you going to buy back in?" And I was like, "No, I'm not going to do it. The only way I guarantee myself that I lose money is if I buy back in now. I've guaranteed I've lost money then. If I don't buy back in, I can continue to enjoy the use of this money, or earn interest on it, do whatever with it, and then when or if Bitcoin comes back down again, I can buy back in at a lower price and make a profit. That's my goal. Eventually, Bitcoin will come down. It always crashes, and then it comes back. So I'm waiting for the crash. Next topic, contagion. Guess who had a bunch of their money in SVB? Circle. What does Circle do? They issued the stablecoin USDC. Circle coin, USDC. USDC is a stablecoin. I've owned lots of USDC over the years. I used to have almost 50, 60,000 in USDC just earning interest in accounts. When BlockFi dumped, I lost $10,000 of stablecoin, USDC. So USDC is a stablecoin. What that means is it's a one-to-one relationship. One USDC, and they have $1. They actually say, we have $1 in the bank. We don't have, it's not securities, it's a dollar for dollar. Okay. So if you lose $24 billion or whatever in the SVB collapse because that's what you had in the bank, are you going to burn that many USDCs? Are you going to reduce the amount of stablecoin? That's kind of hard to do, right? You'd have to buy it back, but you don't have the money because the money's gone. If you had the dollars, it wouldn't be hard. You'd buy it back and you'd burn it. But you've lost the dollars. Now you have this huge hole in your balance sheet. What are you going to do about that? Well, the peg broke. What that means in English is it's supposed to be one USDC for $1. Well, now it's one USDC is worth 90 cents. That's a problem. Coinbase has now said we are not converting USDC into dollars anymore. So you can't try to cash out. Binance, same thing. USDC frozen right now. Not doing anything with it until it's stabilized. It dropped as low as like 70 cents and it stabilized around 90. So if this bank does not get bought out, one of the consequences of that, if they go into liquidation, is that USDC will probably fail as a stablecoin. And it will wipe out tons of equity from the crypto market. Everything will go down. So yeah, there's the contagion from this is not going to stay in a few small businesses' payroll accounts or a few venture capitalist accounts in California. Those rich guys that can afford it. It's going to reverberate to kids that have Robinhood apps that have cryptocurrency. It's going to reverberate across the economy. And I don't think this is a Lehman moment. A lot of people have, is this the next Lehman moment? I don't think this is a Lehman moment. I don't think it's even a Bear Stearns moment. Without adjusting for inflation, SVB was 1/3 the size of Lehman. Okay, so, and on top of that, Lehman was in everything in the economy. SVB is primarily in the venture capital arena. So that's what their downfall was, but also it's where most of the damage is going to be. So Yes, there's contagion, but it's not going to be. It's not like a. This is not the water pulling away from the shore before the tsunami hits. Okay. However, this could be the proverbial canary in the coal mine, because the problem that caused this to happen at SVB can't be fixed right now, because the Fed can either choose to keep raising interest rates or accept inflation, both of which are undesirable outcomes. So one of the other headlines that I saw this weekend is the Fed basically has a choice between a hard landing or a harder landing. There is no soft landing. I've heard people say it's no landing. No, it's not gonna happen that way. This is going to continue. There's going to be more failures. There's going to be more consequences from this, and we will of course keep you posted next week as those play out. Alrighty, there's Rick. I knew somebody was going to jump in there and say Joe Herring before I could find it. Does this mean my 401k is in trouble? We covered that one. Okay. Ronald offers some advice here for the 401k question. It depends how your money is invested. For example, if 100% is in stocks and the market goes down, so does the 401k. If the money is invested in federal bonds, then you are okay. It just depends on where the money is invested. Okay. Then he added, actually split it up between stocks and bonds. The new administration took over, so my account hasn't seen huge jumps or falls. Yeah, so you're going back to the 60-40 portfolio. A lot of people have been recommending that. For those of you who don't know, the 60-40 split basically said that you should have 60% of your portfolio in stocks and 40% in bonds. Bonds provide you security because typically stocks and bonds trade opposite each other, right? When one's up, the other's down, so that it acts like a stabilizer. There is some doubt as to, because of the inverted curve and the distortions in the economy right now, it is very possible, as SVB just found out, to lose money on bonds that are super safe and stable if you transact them. If you just sit on them, everything's fine. So this is kind of like if you bought Silvergate. You can't sell it, but it's worth like half a Bitcoin, but you can't sell it. It's gated. Sorry. All right, I'm starting to think the Amazon guy might be a bot. I don't know. He keeps posting it over and over again. Don't make me. I don't want to ban anybody. Come on. All right. The South Dakota guy just vetoed what was defined as money. It saved Bitcoin, etc., and dissed the Fed coin. Yeah, Fed coin is super scary, guys. It's probably inevitable eventually, but it is so incredibly scary, and that's a whole conversation for. I've actually considered that as a show topic. Like, what is Fed coin? What is a U.S. government stable coin? What would it look like? How would it work? Other countries are trying to do it, and it's not being received really well. But who knows what happens, going forward in the future. All right, so I'm going to put this up now and ask for questions, because I've kind of given you guys all the information that you need to know what's going on here. You now know what caused SVB to fail. You now know why it is likely to happen again at other regional and small banks, specifically regional and small banks. You now know the consequences if you hear the news stories today of there is a rescue or there's not a rescue. There's not going to be a bailout, is what we've heard today. So if there's no bailout, which there should not be a bailout, failure has consequences. So no bailout. Good. Congratulations to the Biden administration. Sincerely. The political pressure to bail this thing out is probably off the charts, especially among a government that believes in modern monetary theory, where you just write a check and it's no big deal, print or go burr, and you just make more money. To not bail them out is the right long-term decision that is going to cause significant short-term pain for a lot of people, including me potentially. So there it is. Now the next big question is whether they're going to have to liquidate the bank, guys. If Thorstradamus was here and he was laying odds on this, 70-30, they're going to liquidate it. Because why would you buy it? Why would you buy this bank? The bank has a good business book. It's got good loans in the tech industry that's currently in trouble. It's got good loans with people that were going to be completely wiped out if this bank failed. Once the bank reopens, what do you think the first thing is that these guys are going to do if somebody buys this? You're going to pull your money out, right? You're going to fix the problem. You're going to divest your deposits across several banks in order to spread the risk. You're going to move to J.P. Morgan, one of the big banks, because you want to make sure that you're safe. So whoever buys this, the next day they're going to see huge deposit outflows they're going to have to cover. The bank doesn't have the liquidity to cover them right now, so it's going to dip into the other bank's liquidity. So you got to find a bank that's big enough to handle it. So this is going to be big banks, or they're going to split it up into several pieces and sell that to smaller banks, which is liquidation. So like I said, 70-30 that this gets liquidated. And if it gets liquidated, expect to see reports of layoffs on Monday. You won't hear about it on Sunday unless you're following social media probably, but expect to hear about it on Monday. Because no board of director, no owner wants to be personally on the hook for millions of dollars of employee wages that you know you're not going to be able to pay. It's not ethical to make people work that you know you can't pay. Therefore, you're going to have to shutter the place and close it down. Yeah, Melissa. FedCoin is like I said. Eventually, it's going to happen. I think eventually it's going to have to happen, just because. This is a whole nother show. Because other countries are going to pool their resources together to form their own version of a digital currency that may or may not be backed by commodities. So, in other words, think gold, silver, oil backing a digital currency, even if it's a fractional backing. That would require the U.S. government to release FedCoin and back it by commodities. What commodities does the U.S. have? We've got lots of pronouns. We can back it with pronouns. What commodities do we have? We have a lot of gold, maybe. Some silver, maybe. There was a big story on gold doping. Oh man, the Perth Mint got caught selling China gold that didn't meet spec and purposefully covering it up when they found out about it. Destroyed their reputation for $600,000 worth of gain over years. It was nothing in the grand scheme. And their number one customer was China. So China got sold dirty gold bars. But guess what? You might laugh that China got sold dirty gold bars. So basically, when they say it's like 99.99 fine gold, what's the 0.01? Well, does it matter? Well, to China, it does. They say it can't be more than X amount of silver. Well, the Perth Mint made it too much silver, and therefore those gold bars did not meet the overly strict standards that China has for gold. You see, China won't just take U.S. gold. Our gold's not pure enough. They have super stringent purity standards, ridiculously stringent. Literally, it's crazy. The gold that Perth Mint sold to China, they could have sold to any other country on earth and been just fine. But not to China. And then they covered it up when they found out about it. They lied. That's what kills it. Because now, if you can't trust the Perth Mint to deliver what you're paying for, how can you trust them to deliver anything? A lot of people are figuring out how to do specific density or specific gravity now to check the content of their precious metals. The world is rapidly moving in a direction of de-dollarization, and that's going to be the catalyst for FedCoin. When the rest of the world doesn't want the old treasuries anymore because they're not worth anything, when the rest of the world doesn't want U.S. dollars because you don't need them to buy oil anymore because Saudi Arabia is accepting currency from everybody else now, and so is OPEC. It's not denominated in dollars anymore like it was. When the U.S. government has demonstrated that it will weaponize its currency to punish who they deem are bad actors, in this case Russia, Iran, Venezuela, Syria, North Korea. I'm trying to think of any others that I might be forgetting. If they could just take Russia's treasury securities, why would anybody want to hold treasury securities? Any country. So when this happens, the demand internationally for dollars is going to drop. It's going to go down. It's not going to go to zero, but it's going to go down, right? Those dollars are going to come home. They're going to end up back on our shores. And what is the definition of inflation? Too many dollars chasing too few goods. If you increase the number of dollars that are circulating in the domestic market, we've had the privilege of exporting our inflation for decades. What happens when the chickens come home to roost? Well, the dollars will come back and inflation will go up. And how does the Fed fight inflation, folks? Raising interest rates. And what happens to banks when you raise interest rates? When they hold lots of old paper. And you can see the spiral, right? We're watching history play out in front of us, guys. We have been probably since 2001, honestly. It's just history moves slow. It's kind of like a tree growing. You don't really see the tree grow, but you look out next spring and you're like, did that tree just get thicker? That tree's getting a lot of growth on it this year. You know, it just all of a sudden one day you see it. You're like, oh, wow, there it is. Or like your kids. They go to bed and the next day their shoes don't fit. And you're like, how is that physically possible? How can a human foot grow an inch overnight while you're sleeping? How does that happen? That's not natural. No more peanut butter cups for you. Those chemicals, they're making your feet big. They're making my gut big too. All right, last call for questions, guys. Let's see. Oh boy, the Fed can deposit their $1 trillion coin. Oh gosh, if they do that, that is the gimmick of all gimmicks. Oh, we'll just print $1 trillion, mint it into one coin, and then yay! And here's the thing. Biden released his budget this week, which isn't a budget, guys. Don't freak out about the Biden budget. 99.9% of it is never going to see the light of day. It's a campaign speech. His budget is a campaign speech. Now, the House is going to create a budget. And then they're going to send it to the Senate, who isn't going to like anything in it. Then they're going to, maybe the Senate takes it up. Maybe they don't even take up the budget. See where we're going here? President proposes a budget. Republicans propose a budget. Only people talk about president's budget. No one talks about Republican budget. Republicans are stupid, so they don't talk about their own budget. They don't, Ted Cruz is out there with his cowboy boots on the table talking about the budget, but that's about it. And, whatever, we're doing our thing. We're being Republicans be Republican. Here's our budget. It's great. And the Senate just says, I don't see no stinking budget. No budget for you. I don't see it. We're not going to look at it. We're not going to take it up. Let's just do a continuing resolution. Give that can another good kick. Raise that debt ceiling. Cleanly. We want a clean debt ceiling limit. Maybe just raise it for 6 more months. Maybe just raise it for 1 year. Maybe just, maybe can we just put it off for a little bit longer? Well, give us more time to negotiate. Another 14 days to flatten the curve. A fourth turning is marked by a dramatic decline in faith in previously respected public institutions. Is that not what we're seeing across all federal institutions right now? The Department of Transportation has 3 train rail derailments per day, and they're like, it's just Tuesday. No big deal. Happens every day. Duh. What do you want me to do about it? What do we want him to do about it? Why is it the Federal Transportation Secretary's problem that trains are derailing? Why is it his problem? Why do we have a Department of Transportation anyway? They handle the FAA, right? So anyway, I digress. But I'm just ranting now. But that budget, don't worry about a lot of the tax increases you're hearing about it. They're not going to come to pass because the Republicans in the House aren't going to vote for them. And you got to have the House to pass a budget. Now, the problem is if we end up doing just a continuing resolution, like keep everything going the way it's going, we can't keep doing that. Short term, we can't. We can absolutely pass a continuing resolution. The sky will not fall. Everybody, no one will die tomorrow. Everything will be fine. But the problem is, you say that every time. This is like me eating the peanut butter cups, right? I eat one, and one peanut butter cup does not change your figure. Two, even two every day, doesn't change your figure. But when you're Thor, you eat half the bag every time you sit down to eat peanut butter cups. Let's just say it's got some defining characteristics, okay? And that's what we're doing to our economy right now. We just keep eating the candy and eating the candy and eating the candy, and we never get on the treadmill. We never produce. We never work. We never save. We never consume less than we produce. We always consume more than we produce. Always. I think I heard a stat that was like for every dollar that's spent by the federal, or that's raised by the federal government, they're spending $1.28 right now. So we're spending 28% more year over year than we're taking in, and we're taking in record tax revenue. Biden's solution is we're going to raise taxes. He doesn't understand because his side of the political aisle doesn't accept this as fact. Okay, we can argue about whether it's true or not, but they don't accept that when you raise taxes on something, you get less of it. So they want to tax, they want a wealth tax. It sounds like, tax the rich, eat the rich, it's good stuff. No, what you don't realize is they want a wealth tax. You're talking about your 401k, right? So let's say you have a great year. Your 401k goes from, $200,000 to $240,000 in a year. Yeah, baby! Biden wants to tax you on the unrealized gain of your 401k. You have made $40,000 is his argument. If you were to liquidate it today, you would get the $40,000. But because you choose not to liquidate it today, you're not paying taxes on it, and that's not fair. You're not paying your fair share, you rich peanut butter cup eating mother trucker. So here we go. Let's pay your fair share, pony up your tax. We're going to charge you 32% of your $40,000, and you should say thank you for only taking that. Have a great day. That's a wealth tax. Imagine your house. Your house goes up in value. Did your wealth not increase? Oh, we're going to put exemptions in for all. We're not going to touch anyone making under $400,000 a year. You tax the guy making $600,000 a year that's employing the guys making $400,000 or less a year? You better believe you're touching them. Corporations don't pay taxes. Schrock Innovations pays no taxes. They pass down to me personally. I pay the taxes. I write the check. I sign my name on the check, and I send it into the federal government. Sometimes if I have really good accountants, like one year they said, Thor, we trumped you. Like, what do you mean you trumped me? We Donald Trumped you. You're not paying nothing. Oh my gosh, you got to be kidding me. How is this possible? Is it legal? It's legal. Wow. Crazy, right? So anyway, the long and the short of it is don't sweat the budget thing right now. But the debt ceiling thing, we got to deal with this. We got to cut some spending, guys. And there is nothing easy to cut. That's the problem. There is nothing that is easy to cut. However, when I look at, now it's come out that the FBI was doctoring, not just withholding evidence for January 6th defendants, but actually changing the evidence, or in some cases destroying exculpatory evidence that would have helped Proud Boys in their cases. Forget that they're Proud Boys for a second. Forget whatever you heard or think you've heard or know or don't know. Let's say they're Ku Klux Klan guys. Okay, they're real bad dudes. Okay, do they not still deserve the trial that's guaranteed to them under the United States Constitution? What happens someday when someone says you're a real bad dude because of what you believe? You believe that a man can't become a woman because, chromosomes. Sinner. Guess what? Now you're on trial. You would be on trial. There is a guy on trial right now in the UK for doing that. It is illegal in the UK to do that. So what happens when you're the one on trial? then all of a sudden you'll want the protections of the Constitution because in your mind you're not that bad of a guy. We can argue whether or not they're bad guys. That's fine. That's a whole separate conversation. What I'm saying is when the FBI is actually destroying the evidence that would help a defendant in a trial because it would help them, so they're going to destroy it, or they're going to edit it so it doesn't help as much, that is a fundamental problem. That is some bureaucrat with too much time on their hands. So maybe we should cut the bureaucrats in half, work their asses off so they can increase productivity like everyone else in the economy has had to do, make them come to work. None of this working from home crap anymore for federal employees. I'm sorry, I have family members that work for the federal government. They work from home still. It's BS. You're nowhere near as productive. And you eat more. So get back into the office. Get them all back into the office. Why are we paying for the office buildings if we're not bringing them into the office? I have to go to work. You probably have to go to work. You know, some jobs you don't have to go to work. I get that. So if you're a coder, you could probably work from home. If you're an HR person, maybe you can work from home. If you are working for the IRS, why am I on hold so long? You're telling me it's because the IRS doesn't have enough money and they need to hire more revenue agents. That doesn't help hold times. Am I on hold because every time I get through to somebody, their stupid IP phone disconnects the call because the internet went boop? Because they're not in a building with a stable phone system anymore? They're all at home working off their residential internet? Maybe. So why don't we cut the bureaucrats in half? Cut the FBI in half. What do we lose if we cut the FBI in half? Do we have more crime? Will important cases go untouched? Well, when will we have time to doctor all the evidence that we need to doctor if we cut the FBI in half? Now, would you get absolutely ridiculed on both sides of the aisle for proposing to cut the FBI in half? Damn straight you would. Joe Biden would say, see, we told you those MAGA Republicans want to defund the police. They're the ones the whole time that wanted to do it. And people on the right would say, like, we have to support the police and the other institutions. You know, some people would say, well, look at what they've done. We have to figure out a way to get the bad apples. You know, Sean Hannity would say, we got good people working here, but we got a few bad apples. We got to sort out the bad apples. Well, it's not like they have labels. That's the point. They don't have labels. They need to be so busy with their jobs that they don't have time for politics. That's how busy we got to make them. That's how busy they should be. They're working for us. We're paying them. Can we cut the Department of Transportation in half? Because they don't seem to be doing jack anyway. Can we cut the Department of Education? Can we change to some different tax system that allows us to focus more on customer service at the IRS and less on, revenue collection agents? Second thing, why is it that all government software sucks? If you go to a website for the government, state, federal, whatever, it's awful. It's always awful. It's like it was designed by an ape, a blind ape. But yet, if you get in a Tesla, or you get on Twitter, or you go to Facebook, there's an interface, and there's buttons, and they make sense, and you can click things, and they do things, and it works. Why can't we have software like that? Why can't we use ChatGPT to replace some of the bureaucrats in the federal government? I bet you ChatGPT could weed out 30% of the IRS calls with simple answers. No one's even looking into it. Why would they? They would have to replace staff if they did that. They'd have to cut. Can't have productivity increases in government. Can't do it. Because government doesn't produce anything, you see. They just produce bureaucracy. So we want to produce the same amount of bureaucracy with fewer inputs. Right? So anyway, I will step off my soapbox. Thank you for joining me. I appreciate you taking the time to be here for the After Schrock. Official last call for questions now, and then we'll move it on along. Okay. At first everyone said this is incompetent. Well, it's intentional. I don't think there's a grand conspiracy at work here. I think there's a very simple conspiracy at work, and that's human greed. That's all it is. Everybody is self-interested. Nothing wrong with that. That's what makes the world go round. But when you're self-interested and you have access to other people's money, that's not a good plan. Alrighty. This is why I'm trying to work with my precinct chair to get property tax paid as to what you paid for property tax when you sold. The next time only pays on what they paid for it, not the levies. You know, and that's the thing. We got a property tax notice in Papillion. Apparently, they want to raise a bunch of money to put cameras on schools, to expand some schools, to add some classroom space, and do some special projects, and add a couple swimming pools and a softball field and whatever else. And they said, we want to raise all this money, but don't worry, it's not going to raise your levy at all. And my wife and I just looked at each other like, do they think we're stupid? Like, money's not free. We know that okay, so maybe you're not raising the levy, but the money is coming from somewhere. And so we start looking up definitions, and we're like, yeah, it's just semantics. Yeah, they have other things that are expiring, and they're just going to like replace them with these things. So your levy won't change. It would have gone down, but it won't change because we borrowed more money. Yay me. To put it in softball fields. Okay, I have no one's going to argue that schools don't need security cameras. No one's going to argue that right now. If it's my kid and something happens, I want a security camera. It's not that long ago we had a special needs kiddo in Omaha just wander away from his school, and no one knows where the hell he went. And then he was never found. So, yes, more cameras, security systems, absolutely. I am willing to pay tax for that. But we sat down and figured it out. For every man, woman, not every taxpayer, every resident of Papillion, it was $5,000 a year is what they were borrowing. $5,000 per resident is what they were borrowing to put cameras on schools and build a softball field and improve some buildings. Okay, can we take the stuff we need and separate it from the stuff we want? And then can we take the stuff we need and separate that into things we need right the heck now, and stuff that would be nice to have right now, but we could wait. And whittle it down. This is what a business would do. This is what a family would do. But this is not what any bureaucracy ever does. And I don't understand, because bureaucracies are run by people. But it's because it's people running a bureaucracy with somebody else's money. There is no fiduciary responsibility for the use of that money. There is no expectation that it will be used appropriately. There's just who gets the money that we can collect, and what benefit can we extract from it to allow us to collect more money in the future. Because I'll tell you, they built my daughter's school, and they opened it, and I'm not joking, 1 year later they had a portable outside because they didn't have enough classroom space. Like, any business is going to say, like, let's plan ahead. Let's have some excess capacity here. But no, not a bureaucracy. We can't think ahead. We can't be smart about it. When was the last time we had a real annual budget? I believe it was before. Well, the last time we had a real budget, was it 9/11? After 9/11, did we ever have a budget after that? Yeah, I think we've been flying without a net since 9/11. So there are kids that do not remember 9/11, and they're in high school right now. So they have never seen the need for a federal budget. Now, there have been budgets, they just haven't been passed. And there have been continuing resolutions. We'll just do what they said, plus 4%, go. And they want to give federal employees like a 10% raise. I get it. I've had to give my people raises because of inflation. But they're all working from home. They're all getting benefits now from working from home. They don't have to pay for childcare. They don't have to do things. They don't have to commute costs. Have they achieved 10% savings by working from home? Are we going to let them keep working from home? Maybe we give them a 10% bump, but they have to come back to the office. Can we at least get something for what we're spending? Please? All right. Thank you for joining us, guys. I appreciate you being here. We'll be back next Sunday for another Compute This, and then an After Schrock, and then after that, the 20th is Monday. So after next week's show, we will be on KFAB from 2 to 6, the 20th through the 31st, so 2 weeks. And you're going to hear a lot of what you just heard on that program. But you're going to hear it not just from me. We got some pretty cool guests lined up. If you're going to have a carpal tunnel surgery at some point in the future, you're going to want to listen to the Schrock Show. Why? Well, because we're giving away a free carpal tunnel. No, we're not giving away anything. We're going to have a doctor on that you may not know, who's local, right here in the metro area, who is the best doctor in the country at it. But you never heard about him because he doesn't take insurance. Why doesn't he take insurance? We're going to talk about it. So we got some really cool guests lined up. Did you know that the weather pattern is changing? I guess we've had a triple L cappuccino or something, and now we're going to go into like a new one, and it means that it's going to be like super wet for a while. Yeah, great. Severe weather, the whole bit. So we're going to have guests on talking about that. Do you know, okay, everybody talks about Gen Z kids and what a waste of absolute oxygen they are. Do you know it's not their fault? It's really not. They're not different than any other kids any other time. It's not their fault. So we're going to talk about what their expectations are and what real people in the local community are doing to give them the skills that they need to adult. Real people are helping these kids, and I employ Gen Z people. I know a lot of them. I had the worst customer service experience at T-Mobile that I think I've ever had yesterday. Literally had a woman walk away from me in mid-sentence, turn around, walk away from me in mid-sentence, and she was moving her lips. She was singing the song that they were thumping out in there, but it looked like she was like mumbling to herself as she walked away from me in mid-sentence after she asked me the question. And then we got to where she was going, and she explained to me why she needed the answer to her question as if I wasn't answering. I'm like, I was trying to answer you back there, but you walked away. Doesn't understand nonverbals. Okay, social skills lacking. Okay, I know who we're dealing with now. All right. So anyway, they didn't fix the phone. It's still broken, by the way. Yeah. So yeah, there are challenges, right? But what are we doing about it? Because the outrage train runs 24/7. You can get that everywhere, and you got to have a little of that. You have to identify the problem in order to try to come up with some kind of an answer for it. And some of these problems, we're not going to be able to answer them here. We're not going to be able to solve them in Nebraska, where we have our 2 electoral votes. We've got, all the political sway of a bag of rice. What are we going to do, right? Well, here's the thing. By identifying the problem and talking about the potential solutions for the problem, somebody out there listening is going to be the next senator. Somebody out there listening is going to be the next city council person. Somebody out there listening. Now, I listened to Rush Limbaugh. My whole teenage, I watched his TV show. Like, he helped mold my political opinions. Not all of them, but he saved me from an indoctrination in the public school system, basically. Who's doing that for kids now? Do you really think that they're listening to Bongino? Do I really think any of them are going to listen to my show? Probably not. But they might listen to you at Thanksgiving if you're able to articulate what you're trying to say. So maybe we should have some information. We should be armed with some information on, what happened to the streetcars in downtown Omaha back in like 1913? Why did we ever get rid of them? Has anybody ever asked that question? Where did they go? Was it big bus? Did big transport get rid of the streetcars? The streetcar route looks pretty cool. I didn't realize how big it was until I looked into it. It's going to really be nice. If I had a business downtown, I would want the streetcar too. But I want to know who's going to pay for it and how. Are the businesses downtown going to pay for the streetcar? Are they going to have a levy? Kind of like my softball fields? I don't know. We'll find out. We'll talk about it. All right, guys. Have a great afternoon. We'll see you next Sunday.